Hello, my name is Steve Bigelow with the Candlestick Forum. We can see what the power of the candlestick patterns provide for us based upon knowing what should happen after a signal or pattern. For example, we saw some very strong buying or a buy pattern, your bullish J-hook bobble breakout pattern in the Dow. However, today when they announced the CPI as inflation being at 7.5%, we can see that they gapped down below the previous day's open, which was not a good sign. However, when they started trading it back up, we could figure it was just kind of a knee-jerk reaction until the announcement from the Fed, one of the Fed people that said they will probably be raising rates at least a full point over the next 6 months. That slammed the market back down. That told you when the 10-minute chart was trading off hard that if you had long positions that were not acting well, it was time to close out those positions. Same scenario over here on the NASDAQ. They gapped it down and then they took it back up. Almost, they went positive on the day. But then when the announcement came out, you could see they were selling it off fast. So now the final result is they opened and closed back below the open of that candle that was indicating the bulls were in control. When they're gapping down below the previous day's open, that's a pretty good indication the bears have taken control. Now, how do you know when to take profits during these time frames? Well, this is made very simple by candlestick analysis, because if we're buying down here based upon a candlestick buy signal, where do you think our target is and where everybody else's target is? Up here at the 50-day moving average. What tells us to be taking profits up here versus waiting to see whether they're going through much higher? Very simple process. You flip to your 10-minute chart. And if you're watching your 10-minute chart when you're at the daily 50-day moving average or the target that everybody's watching, we can see what they're doing up there, whether they're going to go up through, or in this case, there's our hanging man, there's our evening star signal. We started closing out the position as soon as it started trading back below the 10-minute T-line. Why? Because if they're closing back below the 10-minute T-line, telling you the sentiment failed up here, we've got a much earlier vision of where the sellers are starting to take control. Same thing on our SAVA. People are trading SAVA. If they're stretching to get to a target, and you're up here in the overbought area, same scenario. Simply flip to your 10-minute chart, and as soon as you can see they're not going through that resistance level, you start taking profits immediately. What's the worst case scenario? They bring it back down. You can start buying on a J-hook pattern, or worst case scenario, you wait for it to come back up through this level to be buying. All this is candlestick logic put into a candle or a graphic depiction to show you exactly where you should be taking profits, even though you haven't had a daily sell signal. So with the market rolling over, what we're looking for once again is to scan for the strongest sell signals. CCI, look at your bearish best friend, J-hook pattern. You can get ready to short this one if the market's open weaker tomorrow. Again, we call this 2+2 analysis. When you can see a strong sell signal right at the level that everybody is watching, like at the moving averages, that's a pretty good indication they're not going this way. That kicker signal, which is your strongest candlesticks signal, is telling you they're selling this one off hard. Wave 1, wave 2, now look for wave 3 to the downside. The bigger the signal, the more compelling. They're telling you the bears are in control. Bearish engulfing signal, close below the T-line. Wave 1, wave 2, look for wave 3 to the downside. Again, I always reiterate, this is not rocket science. This is merely identifying the signals that are created by human nature that tell us what the probabilities are of a price move. So on the other side of the coin, when we recommended SYY, is because of 2+2 analysis. We can see the fry pan bottom. Then we can see a big, huge belt hold signal. We know the belt hold signal wipes out a lot of the selling, and it's still confirming this fry pan bottom. And notice what the confirmation was today. This is why the power of candlestick patterns are much more relevant, because even though the market was off 500 points today, this was showing buying for whatever reason, and it continued the buying into this close or into the close. So I get a lot of requests or a lot of questions of where can we learn candlestick analysis. Again, I've written 3 books. They're not difficult to read, very understandable. I'd recommend the High Profit Candlestick Pattern book. That's the one that has all the meat in it. Your 12 major signals plus the patterns that work very effectively. Then if you want to get rid of your emotions out of your trading, this book was not written only for other people to read. It was written for myself to kind of clarify how candlestick signals and patterns improve your self-discipline and keep your emotions out of your trading. That'll be it. We'll see you in the chat rooms.